Okay, so let's review these few past questions so at least you appreciate how questions are set under this topic. Okay, so the first one. Profit is the difference between revenue and expenses, right? Profit is the difference between revenue and expenses. This is a concept of A, matching, B, consistency, C, materiality, D, prudence. So, Prof. Sandra, based on what we've discussed so far, what is your best option?
I think matching.
And perfectly that's the answer, matching concept, which says when you're looking for profit, match revenue to the associated or related expenses. Okay, great. So in 2010, if you wrote your WASI, you would have gotten 1 mark. The next one says, okay, so the assumption that stock be valued at net realizable values is in conformity with the A, prudence concept, B, historical cost, C, accrual, and D, going concern. I'm sure you'd have a problem because of what net realizable value is, but just try to make some meaning out of it. Net realizable value. The assumption that stock should be valued at net realizable value is in conformity with
Prudence concept.
Wow, that's how did you get it? Explain to me how.
I don't know.
Okay, so try explaining net realizable value. What does it mean? Or maybe you used you assessed the options and you felt that it's not going concern, it's not accrual.
Yes, please.
Okay. So that's a good strategy. But what it means is that net realizable value means that let's say you have 2 phones, a stock of phones, just 2 of them to sell, right? Net realizable value is how much you are going to get after selling those stock, having deducted all related expenses. Okay, so in a way, it is a measure that ensures that you don't overstate your stock. So for example, if you have 2 phones, that let's say you bought them around 5,000 Ghana cedis, but you know that when you go to sell those 2 phones right now, and maybe you incur some cost, maybe you ask somebody to advertise for you, have to pay the person, maybe you have to even deliver the phones to the person, you have to pay delivery costs. After all those things, you would realize, let's say 4,500 from it. Then this concept states that you should rather record those 2 phones as 4,500, which is how much you are likely to get if you sell them, rather than recording them at 5,000. So in a way, it's a strategy of you not thinking about, oh, I'll make profit, but behaving in a way that if the unfortunate happens, at least you made a provision for it. It can happen that yes, you go to the market and you sell the 2 phones, you get say 5,000 or 7,000. Then that's a plus for you. So true, the answer is the prudence concept. Okay. The next one. In the preparation of trading account of Omiya Limited, the company included credit sales of 18,000 made during the year. The concept guiding this treatment is A, materiality, B, dual aspect, C, matching concept, and D, money measurement. So they included a credit sale of 18,000 made during the year. Prof. Sandra.
Money measurement.
Money measurement. Money measurement. Money measurement. Well, I think it's because you see the monetary element here, but if you reanalyze, you see that the company included credit sales that they have not received money for it, but because it belongs to that particular year. Okay, so it says included credit sales made during the year. So even though they have not received the money, they are adding it to that particular year because it belongs to the sales for that year. The best answer is accrual, but in the absence of accrual, matching concept works the magic for us. So the correct answer is the matching concept. So the matching concept, that's why it goes together with the accrual concept. So for example, if you made a sale, let's say 50,000, right? But you only received 25,000, which means the other 25,000 has not been received. It will be paid, maybe it will be paid the next year or something. But if you are preparing an account for that year for which you sold the goods, you are going to include the 25,000 you have not received as a credit sale to that year, because you want to compare the revenue or the sales of that year to the expenses of that year so that you can determine your profit. Okay, so the best answer here is the matching concept, but I think you are doing well. You have a 2 out of 3. That's great. So let's move on. Any question?
No, please.
Okay. The next one, in bookkeeping, the recording of cash and goods withdrawn from a business by a proprietor is guided by the concept of, I think this one is easier, right? Cash or goods withdrawn from a business by the proprietor or the owner is guided by which concept? Is it the materiality, accrual, business entity, or consistency?
It's no idea.
Oh, please, come on now. You are the only person here, so you have an idea. Read in between the lines. In bookkeeping, and bookkeeping means you are recording transactions, we acknowledge goods or cash withdrawn from the business by the owner or proprietor. So which of the concepts guides this? So for example, Sandra, you own a business and you are the owner of the business and you are taking goods or cash from the business. Which principle would require the accountant to record it?
The business entity.
Exactly, the business entity concept. Okay, because it says that the owner should be separated from the business. So if the owner is taking something away from the business, it has to be recorded. Okay, the next one. So you have 3 out of 4 now, still doing great. The next one, read it and choose your correct answer.
Which of the following is not an accounting concept? 1. Materiality. A. Materiality. B. Consistency. C. Legal entity. D. Periodicity. C. Legal entity.
So this is an easy one. Legal entity, there's nothing like that. Materiality is correct. Consistency is correct. Periodicity is correct. So the only odd one out is the legal entity. Wow. A bonus question. But if you don't know, you don't know. Okay. Revenue should be recognized until they are realized. And all foreseeable losses should be provided for. This is in compliance with which of the concepts below? So it says revenue should only or should not be recognized until they are realized. and all losses, foreseeable losses, should be provided for. I think Prof. Sandra, this is easy, right? Is it a prudence matching history?
Prudence concept.
Exactly, prudence. 5 out of 6. Great. The concept that describes the fundamental equation, asset equals liabilities plus capital, is it accrual? Is it consistency? Is it conservatism or dual aspect? The concept that describes the fundamental equation, asset equals capital plus liability. Which of this? I think you would have to apply the knowledge you've gotten from all the concepts. Which of them describes the fundamental principle in accounting?
Dual aspect.
Exactly, the dual aspect, which speaks about the double entry. And of course, the accounting equation is related to the double entry, because then it moves on to say an asset may increase, a liability will reduce, a capital may increase or reduce, and brought in that equation. So that's true, the dual aspect. So you see that some of the questions are straightforward, others you have to think in between the lines. Okay. The next one says the prudence concept demands that A, care is exercised in recognition of profit. B, loss should not be anticipated. C, profit should be reported. And D, income should be recognized and disclosed. So which of them, the prudence concept, which of them best describes the prudence concept?
Care is exercised in recognition of profit.
That is very true. The accountant should exercise care in recognizing profit, or should be cautious. Okay. The B is wrong because rather it's expected that losses are anticipated or predicted so that it can be provided for. Okay. The next one. So you're still doing great. Oh, wow. You've just gotten one wrong. The way you are getting all the questions correct, I'm jealous. The next one, which accounting concept helps in ensuring the mathematical accuracy of records? Business entity, conservatism, dual aspect, money measurement. Mathematical accuracy. In accounting, how do we ensure mathematical accuracy? Okay, I think you have to think in between the lines. Mathematical accuracy. How do you know that you are accurate? I think you can only know that.
I think dual aspect.
Exactly, because mathematical accuracy is determined in accounting by preparing the trial balance, where all your debits should be equal to your credits. So it still bothers about the dual aspect, which is speaking to us about, the double entry, the debits and credits. So that's true. The accounting concept that demands that assets are recorded at their purchase price. I think this one, I'll get it myself. Is the historical cost, of course. Okay, that's an easy one. A firm using FIFO method of valuation should not change. Should I continue this question? I think you know the answer, right? A firm using a method should not change. So that's what?
Consistency concept.
Exactly, consistency concept. Okay, I think we'll do the next two and then we'll wrap up with our class today. And I'll share the recordings, especially for your colleagues who had network issues. Okay. Okay, I think the next two are more of theories, right? So like I said, they give you some scenarios, and the requirement of the question, you are required to state and explain the accounting principle or concept that should apply in dealing with each of the problems. So let's look at the problems and see if you can prefer a specific principle that speaks to it. So it says, during the preparation of the annual account of WAEC Limited, the accountant was faced with a number of concerns. So the concerns are summarized below. The first concern was that the managing director wishes the company's good public image to be reflected in the account. Which concept would solve this issue? The manager wants the accountant to report the company's good public image. Okay, let's look at the B. The future existence of the company is extremely uncertain. So which concepts speak to existence of a company? And the next one.
What? Concern.
Okay, so for the B is correct, going concern. We'll come back to the A, unless you have an answer.
I was thinking maybe periodicity.
Okay, we'll come back to that. Let's go to the C. One of the owners of the company has invested his dividend in some shares of another company. Which principle speaks to this? The owner of a company has invested his dividend in some shares of another company. Let's look at the last one.
Business entity.
Exactly, business entity, that's true. Then the next one, at the end of the year, so like the owner is separate from the company, so whatever he does is not really an issue with the company, right? Good, so that's business entity. The last one, at the end of the year, an amount is outstanding for electricity consumed during the accounting period. So an amount is outstanding means we haven't paid it. So it's like we haven't paid some amount of electricity consumed during the accounting period. Which of the principles or the concepts?
Accrual concept.
Great. So that's accrual concept. Great. So let me come to the first one. So you had B, C, D correct. The first one, it says the managing director wishes the company's good public image to reflect in the account. That is money measurement. Because money measurement says that you only record in the account things that are of monetary value. How do you value good public image of a company? It's difficult to do that. So non-monetary elements are not added to the financial account, right? So if the director wishes the company's good public image has no monetary value to it, so we can't reflect it in the account. So that's money measurement. Okay, but I think you've done a great job so far. So let me pause here. If you have any question, please ask me. If not, Mr. Moore, this will be my signing off. I think in our next class, we'll look at next topic. So we are done with this accounting concept and principles. So you just have to remember them, and when the questions come, you apply them. Any question for me, Prof?
No, please, no question.
Okay. Thank you very much. I hope you at least learn one or two things and you appreciated the discussion. I'll see you next time. Bye-bye.
Bye.